Want to level up your crypto game without getting rugged or overpaying for alpha? Welcome to Dad's DeFi space, where we break down real strategies, new DeFi tools, and altcoin deep dives every week. Grab the free DeFi crash course at Dad's DeFi space and follow me on Telegram for all my real time plays. Now, if you want more, join us at Dad's DeFi space, free education, free articles, and join our private group and start stacking some yield smarter. Now, let's dive into today's video. I wanted to make everyone out there aware of this one if you haven't already heard. So keep you posted in the near future. Next, I want to get into our coin review. We published an article. You do have to be a member of Dad's DeFi space to get this one on Avantis protocol. Now, these protocols are going to be perpetual dexes where you can trade leverage, kind of a competitor to Hyperliquid, which has been a darling of this market cycle. There's one that's sponsored by Coinbase. That one would be Avantis. And then there's one that is supported by Binance and CZ. Now, the Binance one is called Aster, and we'll talk about that one in just a minute. Hold on 1 minute. I got to let the dog out. All right, back to what we're talking about. So Avant and Aster, the one supported by Binance, are going to be competitors to Hyperliquid. We have been researching, putting some of our research in our free Telegram group of which one's going to perform better. I'm actually leaning towards starting to amass a position of both. We already have an Avant position, and we also have two Avant liquidity pools, one paired with USDC and one paired with wrapped ETH that we will look at in a minute during my crystal vault review. So is Avant the new Hyperliquid? And after this, we can even talk about Aster, because I want to talk about that one too, at least briefly in this video. So Avant, the new Hyperliquid. These protocols are like David versus Goliath. And that's how I framed it within my article. What's interesting is David killed Goliath, the small guy, with a rock. And here's what the beauty is. They may not outperform Hyperliquid, but these are not, especially Avant's, not even $1 billion protocol yet. And that is low market cap, which means you could have the potential, I could have the potential of getting a good multiple with this investment. Again, not financial advice, just things that I'm looking at. So what's interesting is these two challengers that are stepping into the battlefield for DEX plays are Avantis and, again, Aster. And here's what's interesting, right? As the new Hyperliquid, when I published this article, Avantis only had a $171 million market cap. I think now it's a little bit more than this. The fully diluted value is around 818 million. Now, I'm pretty sure the Binance sponsored one is already bigger than this. The total value locked on the protocol when I published this was 18.1 million, 30-day fees 1.2 million. So right now the protocol is kind of a baby, but I think these two are going to be very much large narratives at the later stage of the cycle, and I want to be on those trains as they occur. I think this is a good play, in my personal opinion, and I am investing myself. So what's interesting about Avantis is that they are handling millions of dollars in derivative trading volume despite their thin liquidity pools, and they're getting bigger and bigger over time. That proves that there is genuine demand, fragile liquidity. So it's a risky play. It's a risky play, but this could have a huge payoff, right? They have risk-managed liquidity pools that can take heavy downside and perps. But what's interesting is they have like advanced risk management. If you're wanting to farm on their protocol, I have not looked into that yet, but maybe we should in the near future. They have trader loss protection, synthetic real-world assets that you can trade, base integration already, which is going to be huge for Coinbase, and institutional grade backing, but so does the other one too. Now, the tokenomics on Avantis, it's okay. We got on-chain incentives, invest around 28%. This is for staking, liquidity, rewards, et cetera, et cetera. We have investors in the project. These are your institutionals and your VCs at 26%. This is totaling 50. Team and advisors, 13, a 12% airdrop, 9% system grants, and a 6% liquidity reserve, right? If you want to read through the article, we go through the team, but it has a great team. It's backed by Pantera Capital, Digital Galaxy, or excuse me, Galaxy Digital, the Founders Fund, and even the Base Ecosystem Fund. So there are many institutional clients that are super, super bullish on this one. Now, the Avantis community is still early, so it's hard to say how this is going to develop over the next little bit, but the trading has happened. There's incentives in place. There's supposed to be a government's evolution. And I think that you can invest in Hyperliquid. It's going to perform well. These maybe even better. So I have plenty of plays this cycle, and I want to go a little more degen-y, looking at these dexes that almost operate like a sex exchange. And I wish I could have gotten in on Coinbase or Crypto.com or any of Kraken, any of those exchanges back in the early days. But I just wasn't here to do that. This is an opportunity where you could possibly do that. Just saying, right? But enough about Avantis. You can see right here, because this middle line, this is Hyperliquid's kind of volume or fee revenue, excuse me. Avantis is very low, doesn't even compare to GMX or DYDX, although I think this is going to surpass both of these in the future. Right. Now, let's talk a little bit about the strengths and weaknesses of Avantis. Number one, has billions of trading volume, millions, even though there's a low total value lock, which is interesting, right? Public founders, strong institutional backing, that's a positive. There's trader protection, LP risk management. These are differentiated features that other protocols don't have. And then there's weaknesses also that we need to talk about, such as a very thin total value lock. It's competing directly with Hyperliquid and other dexes, and execution risks. Like something could fail, you get hacked, and something like that's not going to do well with a protocol like this. So base case for me is about a 2 or 3x on this one. Bullish case would be a 10x, right? Bearish case is it goes to 0. So very, very risky play, but one you really should check out. So if you're interested in this, please check out the full article at Dad's DeFi Space. Consider joining, and please become of our ever-growing community. Now, let's take a look now at, at Aster. Now, this is a really new one, and I wish I would have gotten on it in the last couple days, because if you take a look at this chart, it is bullish, right? It literally has taken on a 136% gain when I heard about it. I did not jump in here when I should have. I'm so disappointed in myself. It's already pumped up to $1.40. It just keeps going. I kind of want to jump into it. I always tell myself I'm not going to chase pumpers, and this is definitely a pumper. I am looking for a good entry. I first found out about this at about a $900 million market cap. It's already at a $2.29 billion market cap. This is the one that is supported by CZ Binance. The 24-hour trading volume is $697 million. Now, it only has about 25% of the circulating supply. I have no information on tokenomics community, any of this yet. It's just one that I'm just starting to research, but I did want to introduce it to everyone. Aster, supported by Binance. It is a new competitor to Hyperliquid, just like Coinbase's Avantis. I'm bullish on both of these plays, even more so, I think, than Hyperliquid. I think they are going to have to start to offer some new strategies, maybe lower fees, to kind of stay competitive if there's going to be some more makers in the space that are competing against them. Just something to think about, and I wanted to make you aware of both Aster and Avantis if you don't follow me over on X or in the free Telegram group. Now for the fun part. We're going to be taking a look at my Crystal Vault portfolio. We now have 2 vaults that you can become a part of. Joy, right? And not a lot in these vaults at this point, but the total value is about $1,173. Now, this is a brand new vault, wrapped ETH. I wanted to highlight it first. It's super small, only $100. We're going to build it up, and you can follow on the channel as we build these portfolios out.
I don't want to add a whole lot to this because I expect the market to go down. That means wrapped ETH will go down. And I'm going to wait till I see where we settle in, and then I'll probably start adding more and more to this portfolio. Right now, we're sticking with just Avantis, but I would love to add a position of Aster if it becomes available on the base blockchain, because this one is on the base blockchain. This negative 42 P&L is from my old positions. So far, this one has actually been performing pretty well. Our 7-day APY, 349%, right? And here's our position. This one's out of range. That's okay. I do not want to actually, we'll rebalance this one in just a minute. But this wrapped ETH Avant position, this is my wider one. It's about to go out of range too, which is no good. So these will not be earning fees soon. We'll probably set for just a little while, maybe rebalance this one. I'm going to wait 48 hours and see what's happening in a couple days. This is why they're not big positions yet. I kind of want to see how they're performing, how wide I need to make the range. This one I obviously did not make wide enough. So we're going to probably add some onto this side of the range. Adding more wrapped ETH into the position. But we're bullish on Avant. I'm okay dollar cost averaging on the way down a little bit. But I do want to wait and see what kind of correction Avant gets before I enter with size. But this is a new crystal vault that we're going to start sharing out if you're interested in joining. I'll put the link in the comments if anyone's on the live stream. And if not, I will put it in the description when we finish up. That is our wrapped ETH pool on Crystal Vaults in the comments if you would like to join. Again, like I said, this is a super small one, and we're just playing with it right now, right? Now, let's go into our biggie today, right? And I'm going to go back into Dad's DeFi space. USDC Vault and Crystal Finance. This one is about $1,000 right now because I withdrew a little bit of capital out of it that I'm using. I put into some stablecoin positions. I was waiting for a drop before I deploy any of this, and we're going to collect a little bit of our fees today off the Avant position. I have a 100% range, smack dab in the middle. This position's been performing well. I'm $61 in profit. We've made $20 of fees. I need to claim this $7. We're just claiming our fees as Avant and as USDC because I want to, the Avant, I want to just hold on to for now. Now, when it drops, I may add it to my liquidity position because it's just going to convert to USDC as it goes up, which is me taking profits, ladder right now, right? And what's so interesting, these Avant is hot right now. So the fees have been juicy, okay? Super, super juicy. We'll try that a little bit later. All right. Anyway, so let's review some of these positions real quick. So just to let you know, as far as Dad's DeFi Space Vault, we did make some changes. We have a wrapped ETH USDC narrow range position. It's around 10% wide, earning about 50%. This is something that we're going to widen out and not worry about making so many fees on because I want to use it to ladder out of Ethereum, but I am not going to change until we get closer to the upper part of the range, or I can widen the range if we drop below $42,085. But this is core position within our fund. It's earned us around, since rebalancing, $5. 46% APR. The age of this one's 28 days. I've rebalanced twice. Then this is our older USD position. I run this one because I like to watch the APRs, kind of compare the two. This one only has like a few dollars in it right now, and it's not earning as much yield as the one on Pancake Swap. So we allocated all our capital back to Pancake Swap, and the fees will go into this one. Also, this final position is our Avant full range position. It does not earn as much yield. It's earning about 289% right now. It's a full range, so it's half USDC, half Avant. And as this one goes out of range, we'll probably allocate more of our capital into this infinity pool. I think just because I don't have to watch it as much, but we will lose out on some APR. Now, using this 100% range, I'm able to get the APR up to around 700%. It's 35% of this entire portfolio. It has been earning very, very, very well. And that is our new position within our Dad's DeFi space USDC vault. Now, what's interesting is we're going to have to follow and see how this performs during a market correction, because I do expect yields to go down. I do expect the price to go down. But this entire USDC one is up $100 or 5%. Now, we have earned a little bit of revenue on that. That's for, we do earn a little bit of commission when people join our DeFi space USDC vault or the Ethereum vault. This USDC vault has had people in it before. Right now, I believe, yes, I am the only one in this pool, so it's all my capital. But if you'd like to join, please do. I can farm with us. Now, what I want to do next. Thank you for staying with me the entire video, and I hope you are leaving a little bit smarter about either crypto or DeFi. Like and subscribe to help support the channel. Check out our webpage at dadsdefispace.org. And if you really want to consider developing your DeFi game, check out CryptoLabs Research Underdog Investment Group, the best DeFi private community in this space. And if you're interested in trading on a non-KYC exchange, check out our link from Weeks, $30,000 of USDT, or if you're not interested, maybe Blowfin or BitUnix. The links in the description are affiliates, but they do help support the channel. Again, thank you and have a great